Like and subscribe to support the channel. Donations welcome.
Understanding the complexities of consumer credit and debt is paramount to protecting one's financial well-being. In the modern economy, credit plays a crucial role, impacting everything from securing a mortgage to obtaining a car loan, or even simply making everyday purchases. This section will delve into the intricacies of consumer credit, explaining key concepts and outlining strategies for responsible debt management, all within the framework of legal protections afforded to consumers. At the heart of the consumer credit system lies the credit score. This three-digit number, calculated by credit bureaus like Equifax, Experian, and TransUnion, summarizes an individual's creditworthiness based on their past borrowing and repayment behavior. A higher credit score typically translates to better loan terms, lower interest rates, and more favorable repayment schedules. Factors contributing to a credit score include payment history, the most significant factor, amounts owed, length of credit history, credit mix, the variety of credit accounts held, and new credit, recent applications for credit. Understanding these factors enables consumers to actively manage their credit profiles and improve their scores over time. Regularly reviewing your credit reports for accuracy is crucial, as errors can negatively impact your score. Under the Fair Credit Reporting Act, FCRA, you have the right to dispute inaccurate information on your credit report, and the credit bureaus are obligated to investigate and correct any errors they find. Interest rates, the price paid for borrowing money, are another critical aspect of consumer credit. They are expressed as a percentage of the principal amount borrowed and significantly impact the overall cost of credit. Interest rates are influenced by several factors, including the prevailing market interest rates, the borrower's credit score, the loan term, and the type of loan. Understanding how interest rates work is essential for making informed borrowing decisions. For example, a seemingly small difference in interest rates can translate into substantial savings or extra costs over the life of a loan. Before taking out any loan, it's essential to compare offers from multiple lenders to find the most favorable interest rate. Consumers should be aware of predatory lending practices, such as excessively high interest rates or hidden fees, which can trap borrowers in a cycle of debt. Responsible debt management is crucial for maintaining a healthy financial life. This involves carefully budgeting expenses, prioritizing debt repayment, and avoiding excessive borrowing. Developing a realistic budget is the first step towards responsible debt management. A budget helps track income and expenses, allowing individuals to identify areas where they can cut back and allocate funds towards debt repayment. There are various debt repayment strategies, including the avalanche method, prioritizing debts with the highest interest rates, and the snowball method, prioritizing debts with the smallest balances. The choice of strategy depends on individual circumstances and financial goals. Seeking professional financial advice can be invaluable in developing a personalized debt management plan. Credit counseling agencies offer guidance and support to individuals struggling with debt, helping them negotiate with creditors and create manageable repayment plans. The Fair Debt Collection Practices Act, FDCPA, provides significant legal protection to consumers against abusive debt collection practices. This act prohibits debt collectors from engaging in harassment, threats, or intimidation. It also restricts the times and methods debt collectors can use to contact debtors. For example, debt collectors are prohibited from contacting debtors at inconvenient hours or repeatedly contacting them after being requested to cease communication. The FDCPA also requires debt collectors to identify themselves as such and to provide consumers with written notice of the debt. Understanding the FDCPA empowers consumers to challenge unlawful debt collection tactics and protect themselves from harassment. If a consumer believes a debt collector has violated the FDCPA, they can file a complaint with the Consumer Financial Protection Bureau, CFPB, or pursue legal action to recover damages. Documentation of all interactions with debt collectors is vital for establishing a case of FDCPA violation. Beyond the legal protections afforded by the FDCPA, consumers have other avenues for redress. State laws often provide additional consumer protections regarding debt collection. These laws may vary in scope and detail, but generally aim to prevent abusive debt collection practices. Many states have attorney general offices that handle consumer complaints, including those related to debt collection. Consumers can file complaints with these offices to initiate investigations and seek remedies. Additionally, consumer advocacy groups can provide support and guidance to consumers dealing with abusive debt collection practices. These groups often offer free or low-cost legal services and can help navigate the complexities of consumer protection laws. The importance of understanding credit reports cannot be overstated. Credit reports are compiled by credit bureaus and contain information about an individual's credit history, including payment history, amounts owed, and public records. Accuracy is paramount because inaccuracies can significantly impact an individual's credit score and ability to obtain credit. The FCRA grants consumers the right to obtain a free copy of their credit report from each of the 3 major credit bureaus annually. Consumers should take advantage of this right to review their reports for accuracy and identify any errors. If errors are found, consumers can dispute them with the credit bureaus and request corrections. The process typically involves submitting a dispute letter to the credit bureau, along with supporting documentation demonstrating the error. The credit bureau is then obligated to investigate the dispute and take appropriate action. The process of managing consumer credit and navigating the legal landscape of debt collection can be daunting. However, by understanding the key concepts, rights, and available remedies, consumers can better protect themselves from abusive practices and ensure a healthy financial life. Proactive steps, such as regularly reviewing credit reports, practicing responsible debt management, and knowing the protections offered by the FDCPA and state laws, are crucial for empowering consumers in their financial dealings. It's always advisable to seek professional financial and legal advice when navigating complex financial matters. The information provided here serves as a general guide and should not be substituted for professional advice tailored to individual circumstances. Remember, taking control of your financial future begins with understanding your rights and responsibilities as a consumer. Furthermore, the consumer credit system is intertwined with broader economic and social issues. Access to credit is essential for participation in the economy, but inequalities in access and predatory lending practices disproportionately affect vulnerable populations. Understanding these systemic issues can inform advocacy efforts to promote fair and equitable access to credit for all. Policy reforms aimed at protecting consumers from abusive lending practices and promoting financial literacy are crucial for building a more just and sustainable financial system. The rise of digital lending platforms and online credit products has introduced both opportunities and challenges. While these platforms often offer increased convenience and access to credit, they also increase the risk of fraud and scams. Consumers need to exercise increased caution when engaging with online lenders. Verifying the legitimacy of a lender, understanding the terms and conditions of a loan, and being aware of potential phishing schemes are all critical steps in protecting oneself from online lending scams. The CFPB provides resources and guidance for consumers to navigate the complexities of digital lending. Finally, the topic of bankruptcy, while often a last resort, deserves mention. Bankruptcy can provide a legal mechanism for individuals and businesses to discharge overwhelming debt. However, it's a significant financial decision with long-term consequences. Understanding the different types of bankruptcy, Chapter 7 and Chapter 13, the eligibility requirements, and the potential impact on credit scores is crucial before considering this option. Consulting with a bankruptcy attorney is highly recommended to navigate the complex legal process and determine if bankruptcy is the most appropriate course of action. Careful planning and consideration of the potential consequences are essential before embarking on this path. Bankruptcy should be seen as a legal tool of last resort for individuals facing insurmountable debt, a powerful remedy but with significant long-term impacts.
Like and subscribe for more content.